Welcome to The Explainer. Today, we're going to break down how the pros analyze a stock. And to do that, we're using a really interesting case study straight out of India's booming entertainment scene. Okay, so how do you even begin to figure out what a company like this is worth? Well, the key is to have a system. We're basically going to follow the exact blueprint a professional analyst would use so you can see how it all comes together step by step. All right, first things first, you got to understand the world the company lives in. You can't just look at a company in a vacuum. You need to know the whole scene. And for the company we're looking at, that scene is, well, it's absolutely exploding. Yeah, we're talking about India's media and entertainment industry. And just look at that number. It's projected to grow by a massive 10 to 12% every single year. That's some serious tailwind, and it's all being driven by more and more people streaming everything online. But of course, it's not all sunshine and rainbows. This slide really lays out the two sides of the coin here. On the one side, you've got these incredible positive triggers, right? More smartphones, a massive hunger for local content. It's a huge opportunity. But then you flip it over and you see the risks. Things like piracy, the fact that it costs more and more to create a hit, and being kind of dependent on the big streaming giants. So that's the playground. It's this exciting, fast-growing, but also pretty tricky market. Now, who's the player we're focusing on? Let's meet our case study, Tips Music. So who are they? Well, Tips Music is a major player in this space. And the key thing to get here is that they aren't just a middleman. They're a creator. They actually produce and own the content. We're talking songs, movies, the stuff that everyone is watching and listening to on all these new platforms. Okay, so they've got all this content, but how does that turn into actual money? Well, you can see their revenue is spread out pretty nicely. The biggest piece of the pie comes from producing and licensing out their giant music library. Film production is right behind it. But what's really interesting is that growing slice from digital distribution. That's where the future is heading. So what's their secret sauce? What gives them an edge? It really comes down to their huge library of music. I mean, think about it. It's like a treasure chest of old hits that just keeps generating cash, almost on autopilot. That, plus they just get the local and regional tastes. They know what people want to hear, and that gives them a really strong foothold. All right, so the story sounds pretty good, right? But a good story is one thing. The numbers have to back it up. So it's time to pop the hood and take a look at the engine. Let's do a financial health check. And to figure out if they're actually making good money and managing it well, we don't need to get lost in a sea of spreadsheets. We're going to zero in on just a couple of key numbers that'll tell us pretty much everything we need to know. First up, profitability. We're looking at something called return on equity, or ROE. And all this really tells you is how good the company is at making money from the cash that investors have put into it. At 18.5%, Tips is way ahead of the average competitor. That means they're just more efficient at turning a dollar of investment into pure profit. Okay, now this is really interesting. Take a look at this number. It's negative. Usually a debt ratio is a positive number, right? A negative number here means the company has more cash in the bank than it has debt. They are, for all intents and purposes, debt-free. That is a fantastic position to be in. It gives them a ton of security and flexibility. So, what's the bottom line here? The financial health check, it looks fantastic. I mean, you've got a company that's growing, it's super profitable, and it's sitting on a rock-solid, basically debt-free balance sheet. Ticks all the boxes. So, a healthy company is great, but that's just a snapshot of today. As an investor, you're always asking, okay, but what's next? So let's dig into their game plan. Where's all this growth going to come from? And their road ahead, it seems really clear. It's all about doubling down on digital. Right now, they're expanding on all the big platforms. Soon, they're going to start making their own web series and documentaries. And the big goal? By 2027, they're aiming to launch their very own streaming platform. That's a bold move. And you know they're serious because they are putting their money where their mouth is. Just look at this breakdown. A massive 60% of their investment cash is going right back into the creative engine, making more of the music and films that are the lifeblood of this company. Okay, so we've looked at the industry, we've met the player, we've checked the financials, and we've seen the game plan. Now it's time to bring it all home. What's the final call? What's the verdict? First question you have to ask is the stock a good deal? What's the price tag? Analysts use these ratios to figure that out. The PE ratio, for example, is basically how many dollars you have to pay for $1 of the company's profit. And you can see here, Tips valuation metrics are lower than the sector average. That's a big clue that the stock might be undervalued. especially for a company that's growing faster and is more profitable than its peers. So what could this stock actually be worth? To figure this out, analysts use a cool tool called a DCF analysis. You can think of it like a financial time machine. It tries to predict all the cash a company is going to make in the future, and then it calculates what all that future cash is worth in today's money. It gives you a range of outcomes, a worst case, a best case, and then this base case in the middle, which is what the analyst thinks is most likely. And here, that fair value comes out to 485 rupees per share. And that number, that 485, is what leads to the final call in this report. It's a buy recommendation with a target price that matches that base case. What does that mean in simple terms? It suggests there's a potential upside of almost 20% from where the stock is trading now to what this analysis suggests it's actually worth. But, and this is really important, this isn't financial advice, because no analysis is complete without looking at the risks. And for a company like this, the risks are very real. Success in the entertainment business is fickle, right? It's all about creating the next big hit. They're also really dependent on platforms like YouTube and Spotify, and the competition, well, it's absolutely fierce, with both global and local giants in the ring. Which really leaves us with the million-dollar question for the future. You've got these global giants pouring money into India, all fighting for the same audience. So can a smaller, regional expert like Tips Music really continue to punch about its weight and not just survive, but thrive? And that, right there, is the big question every potential investor has to answer for themselves.